Premier American Uranium. We're a uranium-focused company with assets in the United States, underpinned by a consolidation strategy that we are continuing and beginning to carry out aggressively, backed by a really strong group of shareholders and a really strong technical team that we're leveraging to do that.
Great. I think, and your deck talks about acquire, explore, develop, but I think a lot of companies will come on and talk that game. What I think stands out with you guys is that bench strength and probably access to capital and assets around this consolidation place. So what does and we are going to talk about the most recent announcement with regards to the closing of that acquisition. But just talk to me about what consolidation means to you in terms of the quality of what you're looking for, where you're looking for.
So as I mentioned, our focus is the U.S. We've got assets in Colorado, Wyoming, and New Mexico now with the first acquisition. But in terms of quality, we're looking for things that our technical team, which is extremely experienced, identifies as augmentative to our existing portfolio. The absolute key for us in consolidation, in an environment where uranium prices are higher and prices for assets are going to be high, is that we find things that complement our existing portfolio.
So what do you think that portfolio needs to look like for the market's attention? Because I think there's a lot of, the cliche, old boats float in high tide. So some companies take the view of, well, whatever uranium spot price does, that'll reflect nicely. But if you're trying to genuinely build something here, you've got to have a view to how you construct that. So what do you think that looks like?
So we think that looks like a portfolio of assets, each individually, that has an identifiable advancement horizon. So for example, in New Mexico, we're talking about, we acquired something that had a historic resource on it. We just leaped forward by probably 9 to 12 months by bringing out this technical report with the current resource, 23.5 million pounds, that we didn't have a month ago. And now we have a technical report that's recommending exploration, leading to our next mineral resource, leading to a PEA. And that time frame, 24 months or so, is the kind of thing that we think, when you're buying an asset, you need a visible horizon that leads to unlocking of value and de-risking. So we've got that in New Mexico with Sebieta, our first M&A transaction. We've got that with Cyclone in Wyoming, our ISR project.
Right. But talk to me a little bit more about maybe some of the experience of the team, because I think you referenced like mega uranium in there, and that went from whatever $20 to nearly $70, and more recently consolidated 27 up to well over $80. So there's some, obviously, there is a kind of mechanism. There is a kind of set of rules, guys, that you probably can learn from there. What are they, and how do you apply them here?
Well, there's no question that within our DNA, with Mega Uranium being a 4% shareholder, with ISO Energy being a 9% shareholder, and Sachem Cove 31% of the stock, like the bench strength here is extremely strong. Mega and Consolidated, which you referenced, both carried out this strategy very, very successfully with great returns for shareholders. And we've got that technical team. We've got Phil Williams, who's the CEO of ISO Energy, is a strategic advisor. The chief operating officer of ISO Energy is on our board. Tim Rotolo, co-founder of Sachem Cove, is our chairman. We've got, and on the technical side, we're going after assets where our technical advisors and technical team have been operating in that region for decades. They know inside out some of these assets. They're the authors of prior technical reports on some of these assets. So between our financial strength, our access to capital, and our technical team, I think that we have a huge advantage when evaluating M&A.
Right. Okay. And I'm going to come back to that component, because I think there's a US versus Canada conversation that could happen here. But we better talk about the news of the day, which is obviously the acquisition of American Future Fuel. Why that asset? What do you think it does for you?
So that asset was identified by our technical team as the best asset in New Mexico that we could go after. And so we did. One of the key aspects of that asset, or characteristics, is that it's located on private lands, and that means an easier path to permitting and advancement. It doesn't have direct Navajo exposure, and it had a historic resource on it of 18.9 million pounds, which we were able to extremely rapidly and way ahead of schedule convert into a current resource of 23.5 million pounds combined. 80% of that's in the indicated category. I think 18.9 million pounds. But, because of our technical team, we're able to identify assets that can be purchased for a reasonable price and have value unlocked and de-risked through reasonable spend to get that re-rating that investors are looking for in the market.
What are these things? I mean, how much did that cost you? What's the deal structure in terms? And if you're going to do more of these things, do you copy the same kind of formula for funding these things?
I think so. We paid 0.1. It was an all share deal. We paid, the exchange ratio was 0.17. We paid over $2 a pound US for that historic resource. But the key to deciding what you should pay for an asset is having a deep technical knowledge about how quickly you can unlock value. Whether you're overpaying or underpaying for something really relies on that assessment. So with our technical team, I think that we can avoid overpaying for things and really accurately price things and go out and find things that may be overlooked or that are available that aren't on everybody's radar. And that's a key strength of the technical team. As far as our M&A strategy goes, the most important thing, I think, in a higher uranium price environment, it's competitive to buy assets. And it for us, leveraging that technical team to identify the right assets and that complement our existing portfolio is key to not overpaying. So a key pillar of our strategy is acquisition, and we're going to continue to do that only where it makes sense. And how does it make sense? Well, that's by complementing the existing portfolio.
It's kind of interesting. I think when you're sort of starting out, sometimes overpaying is fine, but as you move forward, you clearly don't want to do that. But the other bit is coming back to the bench strength and the access to capital here is competition is only there if money is readily available. It feels like the market is like, not necessarily set up for all players. You've got to have that track record. You've got to have that bench strength, and you got to have a plan. People need to know how you're going to allocate that capital. Do you think there's going to be I'm sorry, I should say, you're going to be completely US focused? That's the big idea, right?
Yeah, that's the plan at the moment.
Right. Okay. So to that regard, are you seeing more money available for US pure plays versus, like, say, Canadian Athabasca?
I mean, it's difficult to quantify because the amount of money available is always driven by the pricing of the deal, right? Is our Athabasca Basin uranium assets raising more money than U.S. assets on the aggregate? I mean, potentially, but for Premier, we look at it specifically from a company perspective. Our ability to access capital with Sachem Cove owning 31% of the stock, ISO owning a 9%, and Mega owning 4%. Premier has the ability where other companies without that bench strength don't, to set the price in financings, get participation from those major shareholders, reduce the dilution impact to our existing shareholders, because those guys come with lead orders that allow us to set price. And I think there's no one else like us, especially in the U.S. exploration space, with that kind of bench strength on the financial side, on the in the shareholder registry.
Right. So what's the kind of pro forma market cap we're going to be looking at? So around 100,
about 90 million. Right? About 90 million.
Okay. Right. Okay. Cool. I think the secret sauce here seems to be, can companies talk a game of growth, show a game of growth, and actually do something, usually requiring money. There are going to be lots of conversations around M&A in this space for sure. I've been talking to a couple of fund managers, specialists in the uranium space. They expect to see it. But one thing they were very clear on is that there's going to be some good M&A, and there's going to be some not so good M&A. So in your mind, you sort of alluded to it here, but in your mind, when you're going and hunting this stuff down, you've got to be able to move it forward, and you've got to have a view that it will add value.
Right.
Obviously, right? But at the same time, you've only got so many people, and you've only got so much cash available. So what's the kind of pace? What's the ambition here?
So we're going to move fairly quickly in New Mexico and Wyoming. We've got the Cyclone ISR project in Wyoming, where we're going to be drilling, imminently. And we're in New Mexico. Our plan is to drill, but plans really changed in New Mexico with this latest tech report. We brought the resource current. the prior owner of the asset, American Future Fuel, they had begun permitting in March for a second phase of drilling there that really this technical report almost makes obsolete, because the first phase of drilling was able to bring in all the historic database into the resource calculation. So now we're in the process of figuring out what the most efficient spend is to start to expand that resource, which falls into a slightly different permit type. So we have a permitting process in progress for New Mexico that will probably allow us to drill by the fall, but we will be spending less money on that drilling because of the success of this tech report. So really in parallel, we're going to be permitting a larger exploration program that could start to expand resources there, which is much more impactful than confirmation drilling of a historic resource. So our approach is the most efficient use of the capital that we have. Our New Mexico and Wyoming drill programs are fully funded with the existing cash. Pro forma it's not pro forma now because the deal's closed, but $12.5 million in cash before closing costs leaves us plenty of money to carry out our exploration plans in both Wyoming and New Mexico. And at the same time, we'll be looking closely at assets that we think would complement that portfolio.
Right. Okay. And tell me where the value creation comes from. Okay. You talk about your three pillars, acquire, explore, develop, right? You're an ex-finance guy, so you know where the kind of where the market perceives the most value. Is it to basically take things up to a point where you can flip it off to someone else with a balance sheet to actually get this thing into production? And in which case, at what point do you look to do that?
I think you always need to be advancing assets in that way, no matter if you intend to move them into production or intend to sell them. So our plan is to advance the assets as efficiently as possible through the standard kind of process. We delineate the resource, we work on preliminary economics, we do metallurgy and additional technical work to kind of prove a mining concept or develop one, move towards pre-feasibility study and into feasibility study. And as you de-risk the asset in that way, you start to make it more and more interesting to potential acquirers. Our Cyclone project in Wyoming is 10 miles west of an existing operator. If we're successful in Wyoming with our exploration program, that could look like a very viable satellite to an existing operator. But at the same time, we won't rely on that as a potential outcome. We'll be developing it to our own standard and building assets in that area that would complement it, with the goal of having our own hub and spoke strategy, at least in concept, so that we can prove the value of it.
And what again, sticking with the value component here, does size matter?
Well, for sure. It always does. It's a very different proposition in ISR mining, conventional mining. Everything matters. Grade recoveries, metallurgy, rock types, everything matters. And what the critical mass is for any given deposit really depends on its situation. So I think that, we have an exploration target on our Cyclone asset in Wyoming of 8 to 12.5 million pounds, approximately, backed by our 2023 technical report. Now, is 12.5 million pounds at a target grade of 0.06%? Is that a viable standalone mining operation? Depending on uranium price, it definitely could be, in my view. And we think that there's upside on that property beyond what's outlined in the technical report. But the idea would be, when you're building a hub and spoke strategy, to reach for, to get all the uranium in situ that you can delineate. Size definitely matters, but we think that we can crest that hurdle in New Mexico and in Wyoming.
Right, and with that's of course the each asset. I think in the last round, I think we were both there. It was a case of pounds on the ground, and that's how the company got valued. It was quite easy. You build up the pounds on the ground, your company was valuable. Do you think those rules still apply today, or is it a little bit more commercial, or is there, because the kind of commercial imperative around that's driven by the demand and lack of supply, that companies who can create something which will get into production, are they valued more?
For sure, I think that is kind of key to the de-risking process. Like, as you move along that spectrum towards visibility on production, your valuation increases. You see it in situ multiples of existing near-term producers or guys who are moving into production, and you see the discount in earlier stage stuff. So I think that kind of nuance or valuation has always been there and will continue to be. I mean, will there be more competition or an excess premium for near-term production? It is a good question. A lot of the shareholders of near-term producers have waited a long time for those companies to move into production and are looking forward to cash flow. But our potential production is further out, but we don't carry the risk of going into production, which is extremely high. Like, as an analyst, I looked at a lot of feasibility studies. I looked at a lot of companies raising capital to move into production, and it almost always takes longer and costs more than people expect. So with Premier, we're not advancing anything into production in the next 24 months for sure. But we think that we offer compelling leverage to the uranium price at the same time. So I think that you're going to, in a high uranium price environment, you're going to continue to see a lot of competition for quality assets. And we expect to, pay market for those assets. And our advantage, in my view, is our existing portfolio. So when we go to pay market for an asset, we're only going to do things that make sense. So we're looking for things that complement our existing portfolio. And in that way, we can afford to pay market price and have it still make sense, as long as we have visibility on a development timeline that unlocks value for that asset.
Right. Okay. I guess we're getting to the point where I'm just trying to look. We invest in a broad range of uranium companies, right? And those could be prospect generators through to explorers, developers, or near-term producers and indeed producers. And I'm trying to understand the valuation or the leverage that each has. Obviously, the further up that line you go, the more de-risked it is, which is attractive. But at the same time, these kind of early stage development stories are kind of interesting too. Slightly more risk, but slightly more upside. Where do you think you sit, or where do you think you look to kind of position yourselves? Because you're quite heavily industry in terms of the share register at the moment, and for retail looking to get in, what would you be saying to them? What's the kind of upside for them?
So what I would say to them is, what Premier is right now is what many of the near-term producers in the U.S. That were forming or assembling their assets and advancing their assets back in 2009, 10, 11, pre-Fukushima, that have, some of them went into production and paused production due to low uranium prices. But the majority of those ones with interesting asset portfolios are in the process of moving into production. And with that, you get pre-production development risk and a whole different set of risks. With Premier, we're in the portfolio building stage, advancing assets, trying to unlock value that way, without near-term visibility on cash flow. But we don't have that production risk where you're not going to get a capital call because we stumbled in development of a mine or things of that nature. So I think with Premier, you get insulated from development risk right now with what we expect to be good leverage, really strong leverage to uranium prices. And I don't think that there's any companies our size in the market, or not many, especially with the US focus right now, because many of the ones that existed 10 years ago or more have kind of moved in the production direction. So that's our positioning in the market. And I think that there's a big void there, and that we're going to provide some utility for people. Right.
Okay. So big US exposure. You're on the OTC as well. So if people want to kind of US want to buy in that way. Again, in terms of getting the structure and the setup right, and learning from the past from the guys who've done it, is listing in the US probably makes a lot of sense with US assets on board. But what size or what stage before you start thinking about doing that? It's expensive, right?
Yeah, I mean, there's definitely a cost to it, and as we go through the process of, I know for other uranium companies with U.S. assets that obtaining a U.S. listing has eventually meant that the majority of their volume was traded there. I mean, I think there's it's one of the largest financial markets in the world, and there's a lot of investor interest in money, especially in their domestic assets. So I think it makes sense at some point. We're moving through a process of building our portfolio, raising more money. At some stage, at some size, it's going to make sense. And for now, we have our OTCQB listing that allows people to buy the stock in the US. But yeah, at some stage, I'm not sure exactly what there's no current market cap goal for that kind of item, but at some point, I think it will make a lot of sense.
Yeah, but as when it was annual $1 million a year, it's probably it'll need to do a lot of heavy lifting for you for sure. I mean, what about in terms of other kind of like, I mean, are you in any ETFs or will you be in any ETFs? How do you qualify for that?
Yeah, so the URNM ETF, we were spun out of Consolidated Uranium, so we've been trading since December, right? And that company, which has now been acquired by ISO Energy, was in the URNM ETF. And so they received, or the ETF received SpinCo shares in our company when we were spun out. And we've since been retained in that ETF. And so that had some buying. You can see some of the impact of the buying of that ETF going back to kind of March, April, when they were rebalancing it. But that we're in that ETF, and now that we're kind of approaching 100 million market cap now that we combine with American Future Fuel, I suspect that we're going to continue to be added to some of the other ETFs that do help with volume and tend to help you move with the sector.
Well, yeah, for sure. And in terms of, obviously, how much cash you got at the moment? You're still around, what, $10 million, something like that?
We're at 12.5 million.
12.5, okay, cool.
On a combined basis.
Brilliant, okay. And then with regards to that register, obviously, I think that's going to be quite important, not just the exchange, but, the shape and makeup of those registers is going to be important to you. What's are your thoughts on that? How do you control that a bit better?
Control the cash?
The shape and makeup of the register. Can you kind of, I mean, I don't know how liquid you are or want to be. You've got cash at the moment, so maybe it's not such a driver, but at some point it's going to be important to you.
Yeah, it definitely is. And I think I understand the question. One of the things that is a big strength for us, but also probably impacts our market liquidity on a daily basis, is the fact that 49% of our stock is controlled by 31% in the hands of Sachem Cove, which is really key. I think when investors look at Premier, Sachem Cove, Mike Alkin, and Tim Rotolo, the co-founders, extremely early on the uranium thesis, you're investing alongside those guys, and they put money into our last financing, and they've been extremely supportive. But that leaves a limited amount of stock kind of in the free trading kind of float zone. And, as we continue to do M&A and execute our strategy, there's going to be future financings where we're going to, work hard to make sure we diversify the hands that those raises go into. But I mean, it's key to our strategy. Like I said, when we acquire something, we expect it to be accretive. We are looking to only do things that make sense. But with the second and third pillar, exploration and development, those cost money. So we're always going to be, extremely diligent allocators of capital. When we use the money that we raise to advance these projects, is because we're certain that we can unlock value with that money. But the process to increasing liquidity in the market, for sure, ETF inclusion helps. But, future financings will start to diversify the shareholder base, I think, as well.
Right. Okay. And just that kind of, again, news flow, say for the rest of this year, and we'll talk about the market, some of the macro drivers in a minute, but specifically for the stuff that you're controlling, stuff that you planned and mapped out right now. What's the next 6 months look like?
So we just completed the acquisition of American Future Fuel. That Sabietta asset, the core asset of that company, we were just able to bring that historic resource current and expand it substantially to 23.5 million pounds. But the plan there prior to acquisition had been a second phase of confirmatory drilling, which we've now leaped ahead of because we were able to bring the resource current with the initial confirmatory drilling. So sometime in the fall, we'll probably carry out a light confirmatory drilling campaign on that. So September, October, I think we'll have the permits in place. We'll do some drilling there. That'll generate some news flow. But near term, we've got, we're a couple weeks away from mobilizing in Wyoming at our Cyclone deposit for a drill program that's going to investigate our Cyclone Rim target and our Osborne Draw target on that property. About 35 holes planned for Cyclone Rim, 37 or so planned for the Osborne Draw, and that's pure exploration to try to delineate some of the resource target that was in the 2023 technical report. So we've got a drill program starting, which I expect that we're going to have a press release out in the next week or so, kind of defining the details of that program. We're just about to get final authorization on that permit, and then we'll mobilize. We've already hired the drillers. We've already staked and flagged all the holes on site. So we're ready to go in Wyoming. So, 2 drill programs at 2 different assets this year. There'll be a press release kind of defining the plan at Sebieta as well. And then, other M&A activity will be kind of more on a more vague timeline. But as we move forward, we expect to have news flow out related to that as well.
Right. Okay. So, Sebieta, Cyclone. I mean, actually, I didn't make a big deal of it, but I didn't realize with the private land thing, it's quite a big deal actually. Maybe we'll talk about it another time. People will be all eyes on you on the kind of slightly vaguer bit, which is around the M&A. If you put yourself up as a consolidation company, they've seen some huge success with people like, UEC and, Denison, etc. Creating huge value around, their M&A strategy. So I think that's the bit people are kind of perhaps leaning into, but at the same time, you kind of, walk before you run. With regards to developing these assets out. I'm excited for that. Just do you mind if we move to a little bit of macro? Because some of these things may presumably affect a lot of the companies operating in the space. You talk about price earlier. You talked about price. That can cure all ills if price starts to move. What are the things, in your opinion, which start to drive price? I suspect you're going to start with the demand and probably the lack of supply.
Yeah, I mean, one of the last things I did as an analyst was redo my supply demand forecasts. So that was, back in February or March. But one of the things that has always been compelling to me for at least the last 6 or 7 years is this supply demand deficit. We've got production of 140 million pounds. We've got demand of over 190 million pounds. And we have the highest marginal cost within the existing cost curve with production costs over $70. There's no question that production has to increase. There's no question that increases in production are hard to materialize. And we've got, in August, I expect Kazakhstan to put out clear guidance on 2025. The world's largest producer will probably produce less than most people anticipate in 2025, and it's going to exacerbate the supply demand shortfall. So no question for me, before all the other catalysts that we can consider that are, extremely bullish, all kinds of news out of the US regarding support for the industry. All these other things are just additive. The most compelling thing is the supply deficit and the fact that the highest marginal cost production, not the tier 1 mines that may come online in the next 4 to 5 years, but the immediate need within for an increase in supply has very bullish implications for the uranium price. In my opinion, in setting uranium price forecasts, I always took the highest marginal cost production and added some sort of margin to it. And for me to get to 160 or 170 million pounds in the next 2 or 3 years to start to correct that supply deficit means much higher uranium prices.
Well, but even so, I think someone said to me on stage in Quebec, it's like, even if price does start to move rather rapidly, these things take time. The permitting, licensing, design, build,
no question.
Ramp up, it takes time, which again impacts on price because there ain't enough stuff around. Scarcity is a wonderful thing in this game. You kind of skipped over a few things there in terms of some of the stuff that the US government's doing. Like, for instance, recent, like $2.7 billion freed up, by them, which is kind of, when he's in relative terms, it's not a whole bunch of money. It is when you sort of talk about 150 million that we're talking about, 3-4 years ago for the uranium fund. What is it with the uranium?
The physical uranium reserve?
Yeah.
Strategic,
come on,
strategic
guys.
uranium reserve.
Yeah. Pay attention, guys, because it's like, it's getting kind of critical now. So do you expect to see like more of that? And is that going to be enough?
I do, but one of the things, the money's one thing for sure. That 2.7 billion, I think, is going mainly into the 4.2 billion that 6 countries committed to increase, or to create a nuclear fuel supply chain that was independent of Russia and China. That's all very, very good. But I think that for uranium producers, we can rely on the fact that the supply shortfall is really what's going to correct uranium price. And what the US can do to really enable supply is not. I think that the markets will be there for the development capital, and I think that the supply demand deficit will take care of the price. Where the U.S. government can really make a difference is in the acceleration of permitting and on the regulatory side. All of those other things are additive and could impact price positively. But moving mines into production, like you alluded to, it's difficult. It's rarely on timeline. That's going to potentially increase uranium price. So, if you could streamline the permitting and regulatory processes to allow people to allow developers to bring mines on quicker, that would be major. So, the money is great, but there's
no. I was going to say, don't rely on government if you're trying to schedule your diary based on what government commitments. Good luck to you. Some of the other thing, kind of moving parts here, and again, this is kind of useful for people that can leaning into the uranium space, because it's kind of reset recently, but I think everyone expects it to go again. They say price is going to be an important part of allowing companies to raise capital and do the things that they want to do. So we all expect price to move again. So be patient, guys. But some of the other things that are going on, obviously, with Kazatomprom's announcement in August, I suspect everyone thinks it's going to be not particularly good news, which will be a price driver. But there's also the geopolitics around that with regards to the kind of Russian-China Kazatomprom triumvirate. Do you think it's a case of the molecules moving around the globe slightly differently, or do you think that China consuming that and then not replacing that into the market is going to be another driver for a bifurcated market in the West?
Those kind of loopholes or how the molecules flow, as you put it, are somewhat predictable, but hard to legislate or prevent until they actually occur. So, if we ban the import of Russian low enriched uranium, does China buy all of it? And then China's domestic capabilities in terms of conversion and enrichment may be unrestricted and sellable. So are we just really displacing and replacing? Those kinds of things are going to have to be addressed as they come up. They're quite foreseeable, but it takes time to move legislation through any government. So I think that a bifurcated market is going to be probably more likely to materialize in the conversion and enrichment than in the U3O8 space, specifically because, as of now, Kazakhstan uranium is accessible. If anything should change there in the near term, I think you'd see because it's such a large and important producer of U3O8, that you would see a bifurcated market potentially pretty rapidly. But I think in the short term, until we plug a lot of different potential avenues for uranium to move around, it's going to be hard to get to a bifurcated market.
Yeah, okay. There's a question often asked, but I think people think it potentially will be coming down the line, or is it something that they're going to have to factor into their investing, on the upside, I guess.
Right.
With regards to the kind of Russia component, this obviously has sort of with sanctions and so forth, obviously from the US. It the conversation recently of waivers, potential waivers to allow utilities to kind of bypass this kind of sanction for a period of time, 2028, even possibly out to 2030. What's your take on that? I mean, I think some of our audience feel that it's going to be business as usual, and the U.S. government isn't too worried about it. We spoke to individuals who are in D.C. recently, Department of Energy, and would suggest that perhaps it's a little bit more relaxed and we don't have to worry too much anytime soon. What are your thoughts on that?
Yeah, I fully understand those concerns, and certainly I think waivers are going to be made available. And I think the most important thing here is that it becomes law, and waivers won't be accessible a few years from now, and that's maybe when the rubber hits the road. If waivers are granted in a fairly relaxed way, I don't think that would be consistent with the intent of the law. So I think that the authors of the bill, the ban on Russian import of low enriched uranium, will be quite vocal about the intent of the bill, and hopefully start to work on a process of informing the DOE that that we don't want to be granting waivers, carte blanche, and that we really want to see that utilities have made an effort to source those conversion and enrichment services elsewhere before we just grant waivers. But in any case, by 2028, it goes away and it's law. So there's going to be a period where it's maybe not as effective as intended if waivers are granted easily, but we do have visibility on a future where this is law, and there won't be that flexibility. So, and we just saw yesterday that the DOE RFP for low enriched uranium, which is to support utilities trying to source low enriched uranium if Russia becomes inaccessible. So I think that there's already mechanisms being developed to help ensure that law can be conformed with and implemented in the most effective way possible.
Yeah, I guess some clarity around this is going to be important, because no one wants retrospective punitive action for doing taking advantage of a situation which is not clear. So I guess we'll see how that all plays out. The other thing which I think, again, people talk to me about, so it's going to be okay. We've got lots of development companies and mines which can be restarted. I think we'll be fine. My initial reaction to that is, if you kind of look at mining generally and development stories and even production stories, there's lots of things that go wrong. Not only do they get delayed, but sometimes they kind of blow up in your face. Things go horribly wrong. And the concern is around what maybe utilities expect production levels to be versus what maybe the reality is going to be. I mean, as a former analyst, any words of advice on that?
Yeah, I mean, taking for granted that undeveloped future mine production that's in people's production forecasts, taking for granted that that's going to be available on any given time frame, statistically is extremely risky. Like, I mean, we have nothing but examples of mines taking much longer to build, develop, optimize than expected. So we saw I think we saw some of this manifest in contracting in 2023. The term contracting for uranium was at a decade high, around 165 million pounds, I think. But term contracting for U.S. utilities was at a decade low. It was less than 20 million pounds of that global term contracting. I think the U.S. utilities were kind of sitting on the sidelines a little bit, waiting to see what the direction would be. The low enriched uranium, Russian import ban, a few other things. But I do think that that kind of complacency or presumptive attitude about that there's going to be material available is quite risky. And if any of those presumptions are being filled by future production that's not where ground hasn't even been broken yet, that this is not good for the security of your own supply and the continuity of operating. And all those things are reasons why I think uranium price is going to have to go higher. because in a situation where, which is repeated historically, in a situation where mines take longer to come online than expected, the only thing that solves that is the smaller, more agile deposits that can be mined coming online. That's higher marginal cost production, and it will have to be substantially in the money, or else the capital won't be there to develop it. So it's all a squeeze that results in higher uranium prices. If new uranium supply is harder to bring on than we expect, and it almost always has been historically.
Yes, it's exciting times. There's lots. It seems like everywhere you look, there are things which should, in the normal world, drive the price of uranium up. It's a small, delicate little space that we happily play in. So, folks, I think a lot of what I've heard today is going to be very, very encouraging for the market more broadly. I'm loving your business model and the idea, and you've started strong with some good assets. So stay in touch and let us know how you get on with everything, okay?
Yeah, we absolutely will do. We hope to be updating you with our exploration plans definitively in the next couple of weeks in Wyoming, and follow that up now that we've acquired Sevieta in New Mexico. Follow that up with once we completely digest the new strategy and technical report there, follow that up with a press release talking about the strategy there. So we're looking forward to a really strong 2024.
Okay, Colin, thanks very much for your time. See you.
Thank you.